Okay, so the last thing we're going to do for the full ratchet is the Series B, and this functions exactly like the Series A, except for it has two full ratchet shares issuable, one for the Series Seed and one for the Series A, and I'll walk through and show you how to do that. So to begin, we're going to begin kind of like we have in the past with the amount invested right here for the Series B. So the Series B amount invested was $10 million. And the share price, and the pre-money valuation was $40 million. And the post-money is the pre-money plus the amount invested. I know this is getting pretty repetitive at this point, but we'll keep working through it. Okay, so now we're going to calculate the share price for the Series B. And that is, once again, the max of the pre-money here minus the amount invested in the Series A minus the amount invested in the Series C. So you can kind of see how this is working down. You're going back down the line. This is how full ratchet will get you. It's terrible for the founders. It causes them an awful lot of dilution, but you can kind of begin to understand how it works. And then you divide that by the number of founders and option shares, and in order to get the total, you have to also add in the options from the Series B as well. Let me put those in parentheses real quick. And then if that is less than 0, we want it to minimize at a penny. Okay, so 2705. So this is not a down round. It's not going to be the same as what we're getting over here. And then shares issued is going to be the amount invested divided by the share price right there. And value will be shares issued times share price. 10 million, that equals the amount invested. So let me get all these in similar form here. Okay, after that, we're going to go down to the bottom and do our full ratchet shares issuable for the Series Seed and the Series A. So just to start, we'll do the Series Seed. So that is the shares issued to the Series Seed times the original Series Seed share price divided by the current share price, which is here. And we're going to use basically the same formula for Series A. That is going to be the shares issued in the Series A, or to Series A originally, times the Series A share price, put that in parentheses, the Series A share price divided by the current share price. Okay, so those will be our numbers there. After that, we'll go up to the number of shares owned by the Series A. And so this is where we'll do our if statement and figure out if we want to use the original shares or the new shares that are being calculated here. So in order to do that, we'll do, if the current share price is greater than the share price at which the Series A shares were issued, then give us the original issuance amount. If not, give us the full ratchet shares issuable for Series A. Okay, that's simple. Then we'll do the same thing for Series Seed. We'll say if the share price for the Series B is greater than the original issuance price for Series Seed, then give us the original amount of shares issued. Otherwise, give us the full ratchet shares issuable. Pretty simple there. Works the exact same way. That's the main difference between each round. So if you did a Series C or D or E or F or whatever, you would just get a lot more of these full ratchet shares issuable Series Seeds and do these if statements all the way down. And that's basically how you can continue this on to infinity. So after that, we're going to go back up here to the series A and do value. So 304 times the share price. That's the value, and the value gained or lost is the current value minus the value from the last round for the series A, 2.1 million. And then we'll do value as if converted. And so that's a current value divided by current number of shares owned. And let's go down and do the same thing for series seed real quick. So the 226 times the share price, value gained or lost. And remember, this is only going to be back to the previous round. It's not going to go all the way back to the initial issuance of series seed. So it's how much they gained round by round. Value as if converted, same thing we just did above. And then let's calculate the conversion rates. So the conversion rate is also going to be an if statement like above, and it's going to say if the current share price is less than the share price at which it was issued. So you can see there's a common theme among most of these calculations. Then take the number of shares owned there and divide it by the original shares issued. And this is for series A. Otherwise, just give us a 1. So there, we have a 1 there. So let's do the same thing for the series seed. We'll say if this share price is less than, and go all the way to the top and get this share price, the original issuance. Then take the number of shares owned, which will adjust accordingly, and divide it by the original shares issued. Otherwise, give us a 1. So yeah, we should have 1s in these conversion rates because the share price here is higher than the share price in previous rounds. After that, we're going to do the founders really quick. So the number of shares owned for the founders is this 1.271 million plus the options issued. Then we'll do value. So value is 1.355 multiplied by the current share price. We'll do value gained or lost. So that current value of 36 million minus the value in the previous round of the founders and options. We can see there's a huge boost to the value for the founders and options, and that's because the pre-money was 4 times higher than the previous round. Then the value as if converted. Let's just do that real quick. 2705. So now we'll do total shares. So that's founders and options plus series seed plus series A plus series B. And then we'll do market cap. So the market cap is total shares times the values if converted. And market cap is going to be wrong, or it's going to be higher than the post money. There's several factors like I mentioned before. Also, you have to account for options. There's additional options being issued, which is going to raise the share count above the market cap above the pre-money. Several different explanations for that. So now we'll do percent of company owned. So shares owned divided by shares of as if converted. Same thing here and here. And lastly for series B. Okay, and so that looks like all we need to do to complete the full ratchet calculations for all of the rounds that we have issued on our cap table. And like I said before, let's go through and reduce the pre-money valuation or reduce the share price to something that would trigger a down round and see what happens right here. So as we can see, the value gained or lost is flat for Series A, which is exactly what we wanted, and it's flat for series seed. Now it shows a negative here because the value in the previous round was a little higher, but it's exactly the same value that was originally issued to the series seed, this 1.29 million. So it's still calculating correctly there too, even though it's a little bit less value than from the previous round. So that's it. That's how it's done. Next, we're going to do the weighted average calculations and go through how those work. And we'll see you in the next video.